Welcome back, everyone. Today, we are going to talk about how to set up your chart of accounts. I know I briefly talked about this in episode 3, where I went through the steps to set up your accounting processes in your company. But as I was recording that episode, I felt like this topic deserved its own episode because there is just so much that goes into this. And so I wanted to do a deep dive on how to set this up properly. Whether you are a small business owner, an aspiring entrepreneur, or you're just starting out, this episode is for you. We are going to dive into the intricacies of creating a chart of accounts, why it's important, and how you can set it up effectively. All right, let's kick things off by understanding what a chart of accounts is. Essentially, a chart of accounts is a comprehensive list of all of your financial transactions neatly organized into categories and subcategories. It helps you track income, expenses, assets, and liabilities in a structured manner so that you can really see where your money is coming from and where it's being spent. So, why is this so important? Obviously, it serves several critical purposes. First, like I just said, it provides a clear overview of your financial health. Second, it's essential for accurate financial reporting, which is crucial for tax compliance and decision making. And last, it aids in budgeting and forecasting, which allows you to plan for the future more effectively. So, a chart of accounts is not just for accountants and finance professionals. It's a tool that every business owner should have in their toolkit. Now that we understand its importance, let's talk about how do you actually create one? Where do you start? Step 1 is to determine what accounts you need, and this will depend on your business type and industry. There are some common accounts that most businesses will have, and they kind of have 5 major categories. So, number 1 is revenues. That includes everything like sales, interest income, basically your money coming in, right? Expenses is things like rent, utilities, salaries, health insurance. Equity is your owner's equity, your common stock, and your retained earnings. Assets are your cash, the property that you have, and the equipment that you have. And then last, liabilities, those are your loans, any outstanding bills that you have, and your credit cards. The purpose of this is to categorize your financial activities into categories and subcategories that make sense for your business. So, how should you structure these accounts in your chart of accounts? A common structure to use is numbers and codes to organize your accounts. So, for example, you might use a 4-digit code where the first digit represents the account type. There's a standard one where 1 is for assets, 2 is for liabilities, 3 is for equity, 4 is for income, and 5 is for expenses. Numbering them like that helps it helps make it easier to find specific accounts when you need them. But keep in mind that the structure needs to be intuitive and make sense to you and your team. In the show notes of this episode and in the resources section on our website at accountablenumbers.com, I have included a free sample spreadsheet of a basic chart of accounts. If you don't have a chart of accounts, this spreadsheet is a great place to start. It has all of the most common account types, names, and numbers. You are more than welcome to use it, edit it, and make it fit your company's needs. And honestly, even if you don't use it, I recommend looking it over to better, have an understanding of the structure and numbering that is standard for charts of accounts. So again, you can just go to accountablenumbers.com, click on the resources tab, and then free downloads. It should be right up at the top. Now, let's talk about some tools that you can use to set up your chart of accounts. Like I said, there's a spreadsheet that you can go take a look at, but also a lot of accounting options out there can help you create a chart of accounts. The choice of software that you use depends on your needs and budgets. And then for small businesses, cloud-based accounting software like QuickBooks or Xero are great starting points. And as I mentioned, they often come with pre-built chart of account templates that you can customize. And if you're a larger company, you might consider a more robust option like NetSuite or SAP, which offer advanced customization and scalability. But, all in all, it's just so important to choose a system that can grow with your business. Okay, so let's say either you've used QuickBooks to create a chart of accounts or you're using the spreadsheet that I provided. But let's say you have your chart of accounts. You think they're set up, everything looks good. It's important to keep in mind that creating your chart of accounts is not a one and done deal. There is always going to be ongoing maintenance involved. Your business will evolve, and with that, your financial needs will change. So it's crucial to review and update your chart of accounts regularly. For example, if you start offering new products or services, you may need to add new income accounts so that when you earn money for that new product or service, it's tied to that account and you can easily see how much money that product or service is making for you. If you take out a loan, on the flip side, you might need to create a new liability account for it. That way you can see what's outstanding in that loan. Think of your chart of accounts as a living document that should reflect the current state of your business. It's always changing, and that's okay. That's actually how it's supposed to be. As we wrap up today's episode, I want to leave you guys with some final tips and takeaways on setting up your chart of accounts. First, take the time to plan your chart of accounts out carefully. This is going to be the foundation of your financial system, so getting it right is crucial. And then number 2 is don't be afraid to seek help if you don't know what you're doing, if you're unsure, if you have questions. All of those things are totally valid, and you should consult a financial advisor or an accountant to make sure that your chart of accounts aligns with your business goals. And then third, let's regularly review and update your chart of accounts to ensure that it accurately represents your business's financial picture in that given moment. It's not a static document, and it should grow and evolve with your business. There you have it, guys. That is the ins and outs of setting up your chart of accounts. Remember, it's not just a financial exercise. It is a strategic tool that can help you make informed decisions and achieve your business goals. Thank you, as always, for joining us on Accounting Recounted. If you found this episode helpful, please consider subscribing, rating, and sharing it with your fellow entrepreneurs and business friends. As always, stay tuned for more insightful episodes coming your way. Until next time, keep those accounts in order.